Alright, hello and welcome to the market review for November 6th. This is a Thursday, of course, 2025. All I did was take one trade today, and I will show what trade that is, and I'll also show a couple other trades that could have been taken. I was a little slow today, but overall, I definitely could have taken some more shorts, but all I took today was just a quick scalp. It was is pretty much guaranteed. I mean, we inverse this gap right here, just a simple long up to these intermediate term highs, that filled this gap, and then took us lower into London lows. It's just, I just felt like it's pretty guaranteed. I also, with this trade idea, we fell short of consequent encroachment, so I knew and then the second we inversed this gap right here, I was like just gonna wait for a small little wick on this candle. I entered, on that little blue dot, as you can see. That's the exact execution. I entered right here after the close of this candle. I pretty much just knew we were going up. So it was a little, little move, nothing too heavy. We'll just turn off the magnet mode. Somewhere about right in there, up till this high. So a little 40-point move I was able to catch today. Nothing too serious. I could, do little scalps like that all the time. Like, I could have scalped this right here. Um, it's like jab up into the quadrant, run back down, hit the lower quadrant, inverse this gap, longs up. Now, the thing is, though, is I would long to top of this order block and then the key open, because whenever you have trade ideas aligned like this, you just you have to respect this right here. And then you're nearing consequent encroachment, so this gap right here laying over top of this order block, if it gets inversed along with the key open, sometimes you will reject just straight off of the key open and then make one more run down and then actually go long. But as you can see, there's plenty of selling pressure, plenty of downward momentum here today. Not selling pressure, that's a joke, but I just thought I would show kind of what I was looking at. These are all my annotations from today when I was looking at price. Graded out this price leg to try to see where this one would stop. Another thing, so that could also help me with profit targeting if I did take this move. But my policy is only one little trade a day. I just wanted to take a little something out of the market that I knew was almost surefire. Just a little 1-to-1. Wasn't anything too heavy. As a matter of fact, my stop loss is below this gap right here, so it was an ultra tight stop. If I do that in a long position, I'll show you. It was like right there, not that big. It was like there, and then top of the gap, so 12. So really, this was like a little 1-to-4. Yeah, little 3. I just did it ultra tight. I didn't even really worry about anything, because if you get wicked out of this, because this is, if you had a long idea, this would be where you'd go break even after taking these highs. So when you do stuff like that, you want a really tight stop, because trading like that will punish you really fast if you're wrong. And also, once you see something like this, this right here is a completely comfortable trade. Regardless, the real banger idea would have been to trade this leg, which I outlined here. You want to see it offer just a smidgen more of a premium for us to sell into, so the upper level of this price leg right here. But we just tapped it, and then we went lower. So the second that you see you tap consequent encroachment of this, is for anybody who uses the fib. Hey, see you, Roth. Take care, man. The second you see a tap consequent encroachment, and then you see a displacement candle like this that inverses this gap, you hop in shorts and take it to right here. Okay, so this is the next move. So really, there were so many trades today you could have taken, but you would have probably entered somewhere right here, and then your stop would have had to have been up here. But in reality, you can pretty much do this order block. So, I didn't even target that low. So it was a little 1-to-1. And the problem is you have this big ass candle, but you could do this order block, and I would consider this an okay stop. But if you're being really ethical, this is your stop. So it's a negative RR. But you are able to get your RR out of just going to the top of this or the top of 10 a.m. key open. But that's that's like just before mean threshold, so you would want to back it up just a little bit and have something like this. This is an acceptable trade. And then, obviously you see how much lower it goes. the best place to target, other than these lows, which considering this is a retracement, you would actually see that this low gets taken out. You would trim some off of your second contract, and then you would target consequent encroachment. You could target this quadrant level of this, and I'll show you what this is. This is the wick. This is the wick on the daily candle that is in Asia, and this was just a massive rejection block on the 4-hour. Yeah, it's just a massive rejection block on the 4-hour, and if we would have seen it get respected, well, we would have saw it get respected. You could have longed off of this. And you see, we're starting to retrace a little bit, but we just dumped today. And yesterday, I know I said that it was going to be very bullish unless we dump overnight. That's what I said. And I'm just going to be straight honest. I was wrong. I don't trade overnight, and, obviously you saw that I was still able to profit, but my idea that I had formulated in the market was quite frankly just wrong. The stock market has been very bullish for a very long time, but it just was not that today, and I keep seeing price just wants to go lower. I mean, you saw how much we dumped overnight here, like 400 points, and then, we just dump into the day, we accumulate, we manipulate, and actually fall short of these highs. And then we just trade lower, retrace on this leg, and just slam lower. Like, this is very unpredictable in terms of the long term, like long term draw on liquidity. I'm talking 2 weeks from now. It's pretty unpredictable. But in terms of the daily draw, I'll show you my thought process and how it was actually a really easy day to predict, and a couple trades that you could have taken. There were probably it's probably 5 good trade setups today, and I will illustrate just about all of them. And if you were a continuation trader today, congratulations. But I am I'm big on reversal trading and then retracement trading, and picking the top of gaps and stuff like that we retrace into. As you can see, the precision. Just look at this. Typically, this is my setup. See a price leg form. See the first fair value gap of that leg get inversed, and then see a fair value gap on this leg get retraded into, and then we move. Then we move higher. But you see how we just consolidated there a little bit, did a stop run that didn't allow anybody to profit, and then you just got that entry right here. But this is typically what I do. It's just this trading right here isn't normally there. However, it's completely okay. I didn't take this. As you can see, there's no executions here. Only right here, which, bought it here, sold it here. So, just do with that information what you will. But, yeah, so I'm going to go and clear up all the drawings and work my way up on this one. And I'll just kind of show you what I was seeing prior to this. So, immediately, I got on and saw we started dumping. I got on just about at 9 a.m. and saw that we started just slamming lower. And I was like, what? What caused this reaction up here? So immediately you go to the higher time frame. We're just going to go to the daily right away. And okay, sorry. Got a text. But immediately, these are all my executions. As you can see, I'm a very active trader. Typically, one or two executions a day is where I fall. This is probably a losing day, to be honest. I think I tried to long this. I think I was able to get profitable on this day, but that's besides the point. I just never really go back and look at all my executions, but still cool. Still cool to see. Anyways, and then I started this account a while ago. Like, I don't know actually. But anyways, the executions are a little distracting. But I don't even know. Yep, don't even know. It'll be alright with them here. So now, essentially, what the goal is, alright, is try to get your sense for where you need to be on the daily. So, I talked a little bit about, I've been kind of talking about it, is this order block right here. This order block to me is just, we're not going below mean threshold with this, which is essentially, it's going to go from here to here. This consequent encroachment level right here is mean threshold. So I'll go ahead and outline that as well. Then I want to turn the magnet back on. But that level is mean threshold. So we don't really want to go below this. We can, because there's a volume imbalance here, but it's sort of already been filled before we obviously went higher off of it. So I just can't help but feel like I'm just a little suspicious is all. I'm a little suspicious. Yeah, I don't know. The executions are a little distracting. I'm going to try to remove them really quick. I don't really like them being there. Let me go ahead and pause this. Okay, so I'm back. Thank goodness I didn't cancel out everything that I've done already. But this is what I see whenever I open up in the morning. So let's go ahead and get back into full screen here. But, you know, yes, yesterday we kind of just did a little bit of ranging around, but at the end we still closed bullish, respecting the new week opening gap, right? Now, if we grade out this entire range, which is formed after this big low right here, okay, we kind of consider it starting right here, so how I'm going to do it, and then here. But it's been pretty volatile, actually, so you could probably do it like this. We are nearing discount. We're nearing a discount on this, you know, but if you really get particular, shrink it down, okay, we're still nearing discount. So no matter how you want to look at it, using the bulk of the price range, you're in discount, like body closure wise. So all of these PDRAs right here, which as you can see are not very plentiful apart from this order block, right now are the most important. These PDRAs are the ones you want to concern yourself with. Typically, it's these or these, you know. But right now, we're nearing into this range, total range, 20-day look back, the low, and then the high. Right now, it's these, okay? Maybe we just totally reject here, and then these, which are normally the ones that you care about, are right. So this new week opening gap, keep this drawn on your chart. Keep learning, keep studying with it, and see, you know, how we're doing. Because we are definitely kind of trapped in here a little bit. And it's possible we may just range around for the rest of this week. But upon today, you know, I sort of just look and I'm like, okay, the body's respected 2 days in a row. We wicked into this order block. I don't know. We may want to discover here a little bit more, but I'm long. I'm long. We have this daily gap right here that also happens to have this volume imbalance that was filled, yes, but we have the new week opening gap right here. You know, it's like, I feel like that's an inefficiency we want filled after we fill this one in. I was wrong, of course, I admit it. But now let's go. And earlier you saw like what we were rejecting out of right before market open. So I want to go ahead and outline a couple 4-hour gaps that I thought were pertinent. You know, one is this bearish 4-hour gap. Okay. What time was this formed at? 6, and this is 10. So really this one's not, oh, I didn't quite see this one yet. So I think I was only using hourly gaps. I might have been using this one as well. Bullish 4-hour. Let me draw this over. Just check. I can't remember. I'd have to honestly look at the beginning of the recording to know for sure. But on the hourly gap, alright, you sort of see that we have this high resting up here, and you have this high resting up here. This was that pre-market high that I was talking about. But then we have our RSI side yesterday's high right here. But if you draw this over in time, you look and see, oh, we just completely filled that in with the wick, with the bodies staying below consequent encroachment of this bearish fair value gap. Now this is important because you see that, obviously, you see in hindsight that this was a PDRA that the algorithm liked, but because we stayed with our bodies down here and just the wick up here, when you zoom down in a lower time frame, which I'll be happy to do, because I also want to see this, we just hit it and then we started pushing lower. So the second that you see this taken out right here, these lows, all this smooth low that was just over top of London, you now have to address, okay, what was the market doing and then why is it moving this way now? Yesterday, we went lower, and then into Asia session, we bounced around a little bit, and then in London session, we failed to take Asian lows, and then we went higher. Now, it was at this moment I was like, that's odd, you know, why do we trade all the way down here? And my answer presented itself whenever I looked here. Oh wait, there's this fair value gap on the S&P. In London, took these Asia lows. So this right here is an SMT. Alright, now I didn't draw this on my chart at the time, but I did notice this. So right now, You see SMT on the 5-minute, and then you go to the Nasdaq, and then you see this SMT right here. So because London failed to take session lows, we essentially look at this as Nasdaq is bullish, right? So it's so bullish, we just have to see who's right. So it's kind of bad. I mean, it's a bad job of me explaining this, but you're driving up here, and essentially, if you go lower, the S&P, that means it's more bearish. It wants to go lower. So it's the most recent set of highs following, or lows following that, to decide who's right, the Nasdaq or the S&P. S&P wants to go lower, fails, gets taken higher with the Nasdaq. The Nasdaq takes Asian highs at the end of London session. That SMT inside of this gap, which just hovered around consequent encroachment of this a gap. I can't remember if this is 4 hour or 1 hour. It's not too important. And then goes up into this gap right here formed in yesterday's PM session. It's important to recognize where they're formed. Both of both the Nasdaq and the S&P see your rejection out of this fair value gap. We immediately trade lower out of it. Take this market structure shift, and we start moving lower. As soon as we get in the open, all right, we just see it dumps. So now we're trading lower. I'll just kind of reboot a little bit. We're trading lower. What is our draw on liquidity for the day? What is our draw? All right, so right away, Asian lows right here, top of this order block. It's looking pretty good. Okay. Asian lows, yesterday's lows. Okay, right here. That's an acceptable draw as well. Sell side. We have more 5-minute lows stacked up through here. I could go to the hourly, but you kind of get the idea. Then Asian lows on top of that order block. So when you stack up the buy side liquidity, which is up here, this looks juicy. You see this, failed to take it. The market wants this. I'm not going to lie to you, it does. But we reject this 1 hour. Alright, we reject that 1 hour gap. And we're moving lower. So now we have to accept what is going on with the market here. And it's that we're moving towards London. We're moving towards London. Okay, so we drop down into the 1 minute. And this is immediately where we start looking for a scalp. Alright, looking for just a short little retracement into something important. And we just need to find it. So I want to go ahead and use this vertical line to indicate, or not vertical line, but it's a little line segment, trend line, to delineate that shift. So as soon as this shifts down, we can now look up here for price to retrace and get into one of these fair value gaps. We don't get that. So whenever we see this retracement, respecting the fair value gap right here, and then sort of right here, this is probably a 2 minute, we sell off again, and we take this high. So now we realize that we're dumping off a little bit faster than we wanted. So essentially, you had to have just had confidence that your analysis was right, because it happened so fast that there weren't very many PD arrays and stuff that you could use. So you just sort of have to accept that. I mean, even here, we failed to wick back up into this order block and then go lower, even with a wick. So I'm just telling you that this was a hard move to catch, but I consider this to be the first good trade of the day, to take London lows. And I can assure you that after seeing that this gap was rejected, I was looking to take a retracement towards these session lows down here, because we already completed that SMT into the 1 hour gap, and now we're turning away. So now we're looking for where is this likely to stop? Where is this move aiming for? Where does it want to go? So let's go to the 4 hour. Oh, a 4 hour gap. Okay. Well, wait. These session lows stacked on top of this 4 hour gap with another gap in between. That's looking like high bullish resistance. This is why I was bullish. Alright, this is why. This gap was inverse with such displacement. Stack that up. Consequent encroachments are very close to one another. That just looks like extreme resistance that the market has to fill. And it blitzes right through it again. So now we're looking at a reclaimed fair value gap for this one, and then an inversion fair value gap for this one, which price doesn't even tap back into the upper range. It was going, and it was gone. Okay, I just can't even believe that. I can't lie to you. That's actually crazy. But if you look on the higher time frame, this low that makes the upper end of this fair value gap, and then this low are stacked right on top of one another, with this low right here this is bearish, but I only thought we would take it and go higher. I was wrong. So we take it, the 4-hour gap. Let's get back to the 1 minute, and now we'll just continue walking through the trades. So we realized that, okay, we get this right here. This is where I was anticipating much more, long potential. And I promise you, if I traded more than one contract today, I would have put some more on this right here. I'm not gonna lie to you. And I would have closed as soon as we went below this candle right here. And this, well, pretty much at my stop loss. As soon as we went below this fair value gap, I would have closed. And I would have, taken some loss, yes, but that's okay. We trade down, take session lows, tap into the consequent encroachment, or just narrowly shy of it, and then I take that long. But little scalp, and then I notice, oh, after I close the trade, I see, wait, massive displacement candle. After taking these highs, tapping into, which I imagine is probably a 3-minute right here. Interesting. We go lower, completely inversing the gap, leaving this gap right here, which was immediately used, tapping off the consequent encroachment. That's how I knew we were selling off. This right here is the second trade. Stacked up on this consequent encroachment. This gap laying right on this. That's the second trade. Market structure shift. That's a breaker. Okay. Which is a low, a high, and then a lower low. You just outline that in blue. It's a breaker. Very, very big breaker zone right here. Stacked on top of this fair value gap. Tap that. You're going lower. Okay. This is just because you displaced the consequent encroachment so heavily. And then we already saw that liquidity was taken to the upside with this high, which makes the breaker even stronger and more plausible. We trade down, so now let's start looking at some targets. So we hit our first target, yesterday's New York AM session lows. So that's hit. And then we trade lower, just falling short of taking these lows that I outlined. Okay, so what does that mean? This is ICT's principles coming full into play. This is the most ICT setup that you could ever ask for. Except it doesn't tap back into the upper range of this. But I outlined this earlier, showing that if you use the bodies of the wick, not the wicks for your fib, you'll get more precision. And if I use the wicks, it would probably make this tick look like the top tick, but in reality, these bodies close higher. It just establishes the body narrative, basically. So, breaker, you go lower, that carries us all the way to just shy of this liquidity, and then we wick into it. This is the best setup of the day for both longs and shorts, all in one price leg. But so we drive lower. You could have taken this trade off this breaker, pretty high scale trade right here, but it drives down, leaves all these inefficiencies, just leaving inefficiency, and then we fall short of this. This is model 2022. This is inefficiency. So we take liquidity. We see this trade right here. This is immediately where you start. This gets flipped in you. You see this 1 minute gap, alright, get inversed. So it's so small I can't even grab it. There we go. I'm going to turn this to a bearish right now. This Peter Ray gets disrespected. We immediately get right over top of it. You should have known. Nothing was going to happen with this one. We trade here, and then we go back up. We leave this gap, immediately inverse it. So that's how you know. You could have honestly taken this trade, but it's really small. I mean, what would this trade have been? You would have hopped in and literally just had to hop right back out. But this is a little 38-point move. But you could have taken that trade right there. This is the very high probability 1-to-1 stuff. That you take. Also because this is not a valid retracement right now, because this gap was immediately inversed. The first gap, you either want it to be completely left open, or you want it to be used in the upper part of the fair value gap immediately. So if you graded this fair value gap out, you would want to see it get respected. And that's something that I've come up with for my rules. That's me. Now it's a derivative of ICT concepts, but this is how I classify a strong retracement. And then immediately, I would like to show this to farther my idea. This bullish fair value gap. It is immediately left open. This is a breakaway gap. The first fair value gap in a strong price leg. We failed to take this, so let's just walk through all this again. This trade right here, bearish. Inversion of the first. This is the first bearish PD ray that is disrespected in all of this price movement. Okay. So now you're easing off. If you have shorts, this is the first hand you see. Right before you get here, you close some profits off right here. Because if you were targeting this, yes, it hit. Yes, it did. But it's much better take some off here, and then have it run up here, and then be like, fuck, I had all this move, and then this retracement actually be to the 75%, and then go lower. That's going to be something hard to sweat, especially considering your entries up here. So you're just going to get kind of close to your stop, which should be resting up here, or it's going to be break even. You're going to get break even. Now, the market wanted to go down, but earlier when I established all that precedent, it seemed like it was going to go up. It really did. But I flipped my bias shortly after as well and began looking for a perfect short setups, which for me, believe it or not, would have been tapping into this range, this fair value gap. If we would have seen this quadrant get hit, and then this fair value gap and order block get respected, I know it's a really niche target right here, I know. But this order block is important because it tapped into this PD array. If it would have hit here, I would have shorted. Yes, I would have. But I would have had to see a strong displacement and inverse on a fair value gap of this price leg, and then I would have written it down. That's what I was watching for later in the day. But I did not get that, unfortunately. Instead, let's walk through the third trade of the day. So you drive through this fair value gap, trade down, and just into this, these two strong candles, supports price, drives up, hits this 25% level, drives down, fails to take this liquidity, and then you start rallying up. So this is the next trade. This is a bearish fair value gap, okay? This bearish fair value gap is inversed with two strong displacement candles, alright? Now, this displacement immediately triggers longs. With the idea that this wasn't completed, that this is a model 2292 on this price leg, okay? You long this right here. You would long it, in theory, to the top of this fair value gap. But, because we have all these inefficiencies, we have this order block right here, which is kind of a shit order block, but it is an order block. You take profits. To be honest with you, you would enter here, and then you would take profits, at a 1-to-1. Because there's no easy targets with this. So, for example, you would probably enter somewhere right here, okay? Then you have, it's hard to grab, but you probably enter right there. Your stop loss is right here. It's a 70-point stop loss, okay? Now, depending on what 70 points looks like, okay, see, it doesn't happen. You don't get 70 points out of this. And this is where you have to have knowledge of market conditions. And essentially, you look at these gaps right here in this order block, and actually you target something a little bit more humble, which would be the opening price. Or I'm going to do the closing price. Yeah, the opening price on this order block. And that's what you would target. So now, this is a negative RR. So this is where you either choose to not take the trade and then try to look for the short, or because you can look for the shorts right now because you're trying to form a long idea. So where would I take profits on my long and start looking for shorts? Where do I think the market's going to turn and be bearish? And then all of a sudden you're thinking okay, it could be here, it could be here, could be here, could be here, and then honestly it could be at the upper range of this breaker. I mean, seriously, if we inverse this breaker and use it, just what? I mean, in theory the breaker is always reversed, but anyways. So really, the best way to do this is just choke it up to the bottom of this fair value gap, and then take a little 1-to-1 here. This is literally my model, but I believe my model is actually a variant of PV Blake's mech model, which is crazy because when I recently found out about the mech model, I was like, shit, that's kind of similar to what I do. You know, but the MEC model just has the stipulation of the highest time frame fair value gap, and that leg has to be reversed. So full credits to them for that. Just kind of cool though. Just a little cool thing to think about. So now we tap this, and then this is your fourth trade of the day, which is trade lower off the discount. You see this gap get flipped. Really, you would start looking for shorts after these two sets of gaps get flipped. Order block, tap into it with this wick right here, because you're expecting displacement, and then you get displacement and you start shorting. You would short just simply to the top of this order block, and you know, it kind of peters out there at the end, but that would be how you could catch the last little bit. The only problem is you really need to find a way to short down here, you know, short somewhere here, and there just doesn't seem to be an easy fair value gap apart from this one, but at first it looks like it's going to respect it. So hard trade, but that's kind of that. And then essentially the last trade, which is very, you know, sloppy, is you sort of would have just taken, like, you would have taken this liquidity sweep in lunch, which I don't even want to really get into. I looked at this on my own time, but you don't trade lunch, right? Nobody does. It's just not right. But really, because you're so oversold, a big wick like this, and then an inversion of like this gap, which was wicked over top of, it's just it's a long trigger. But that's besides the point. Okay, you don't really want to take trades like that. Don't ever start trading like that. And then in the PM, I didn't even look. I just got on, but I just got on to do this review. But overall, the biggest takeaway from today, I did a very poor job of explaining it, just because I was a little shocked by today's market, and I think everybody should be, and should have been, because it's intimidating whenever you see this sort of thing. I mean, it just sold, retraced, sold, and it just was like the retracement was even. It's what you want in a perfect world to show that, you know, it's bearish, but it's just like, wow, you know, it was rough, and there was no news or anything, so it just did this of its own accord, which is just a little concerning. But overall, the big takeaway from today is just two inversion fair value gap trades. The breaker trade's a little bit more complex, but it was this SMT with Asia lows and London lows between the S&P and the Nasdaq, trading up into this hourly gap. You could have immediately taken a long once this was, a short once this was traded down through, stop loss up here, and then your take profit somewhere right here. That would have been a very level-headed trade to make ahead of the open, and you would have felt pretty good about it, I'm sure. But it's a little bit more complex of a trade as well. But that's the big takeaway from fair value gap to fair value gap, which we inverse, but still, in a perfect world, this fair value gap would have actually held up, and you would have seen it tapped back into before we sold lower. And if this would have been tapped back into, I would have definitely taken a short somewhere in this leg. So it gave me a lot of opportunities today to turn my winner into a loser. So on these big trending markets, my advice to everyone, and it's purely opinion, it's purely my opinion, just it's not financial advice or anything, but just be wary whenever you're trading in a trending market like this, because the move is going to occur after the majority of people have been stopped out. So if you see like a super easy setup, you're probably going to get stopped out. And that's all I'm saying. Now, ICT concepts have a lot of, you know, just natural built-in mechanisms, especially if you use inversion fair value gaps. But overall, everything that I wanted to say today, I have said. Just a really easy review today was very nice. I was able to pull something away from the market as well. So, very happy with what I accomplished today. And until next time, good luck and good trading.